On today's show, the gold price is skyrocketing. We're going to talk a little bit about that and what the catalysts are that's actually moving the market. This is the American Confidant.
Loading the American Confidant intro.
We have $15 billion in gold in our treasury. We don't own an ounce.
And one of the problems is we don't have the gold. Other places have the gold.
It's called the American dream, but you have to be asleep to believe it.
The American Confidant.
Hello and welcome to the American Confidant. On behalf of myself, Jim, in the studio. Of course, I am joined, as is every week, by Cash, a.k.a. Carl. Hello, Cash.
Well,
Carl.
hello, Jim. How you doing today?
Oh, simply marvelous, you sexy beast. Also today, we also have Rick, as in the house, our guest trader. Hello, Rick.
Hello. How is everybody?
I don't know. I hear the gold price is going up quite a bit, isn't it?
It is a spectacular, epic moment.
Well, what's going on? What is happening? 50, 60 bucks on the gold price today, correct?
Oh, gold jumped overnight. It started overnight in the aftermarkets. Gold went up over $1,400 last night before pulling back prior to the missile attack in Iran.
Yeah, a guy here, Iran, had a lot to do with it, right? Check this out.
Now, Iran made a big mistake. This drone was in international waters. Clearly, we have it all documented. It's documented scientifically, not just words. And they made a very bad mistake.
How will you respond, Mr. President? How will you respond?
You'll find out.
Are you willing to go to war with Iran?
You'll find out. You'll find out. I mean,
Wow. Did it?
Well, today's market, actually, it started last night. That's the whole point. It began last night.
Yeah, it started right after the close of the markets.
You mean the Iranians were
That was
hitting
a bonus.
drones last night, too?
No,
that was before the attack.
Oh.
Yeah.
Oh, you mean gold went up, had nothing to do with the Iranian attack?
Nothing.
Nothing at all.
Oh.
Yeah. And we had the dollar was rising right along with gold. So we've had the dollar rising and gold rising for the last 4 trading sessions.
Could it be that dollar's rising because you're being force-fed dollars and gold's rising because people are being force-fed dollars?
I think so. The dollar's strong. We've got a strong demand for gold, and we know that it's strong. We know that gold's going to continue to rise.
Inflation, 2%, the Fed said today. 2% theft of your buying power. That's it.
Well, let's hear a little bit from Jerome Powell, because he's been a big catalyst of this as well.
At the FOMC meeting that concluded today, we maintained our policy interest rate, but made some significant changes to our statement. Since the beginning of the year, we have judged that our current policy stance was broadly appropriate and that we should be patient in assessing the need for any changes. In light of increased uncertainties and muted inflation pressures, we now emphasize that the committee will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion with a strong labor market and inflation near its 2% objective.
This is boring the hell out of me.
I think, who's that? I think it's on purpose, Otherwise,
he's as boring as his statement was. What the hell is he saying? Rick, what's he talking about?
Well, see, that's the problem, that he's trying to take the position that Greenspan did, where Greenspan was very vague in making statements. He never was direct. You could never read into what his intention was.
Hank the plank. Let's walk the plank. Well, we'll never default on the debt because we can always print the dollars.
Well, the reality of it is he's reacting. He's data driven. He's not driven by he's not being proactive.
You're right, because he actually reacted to what the European Central Bank did. The European Central Bank lowered interest rates and put themselves in a corner. He is not. However, because he's not lowering interest rates right now, doesn't necessarily mean that he's going to pull a trigger in July to lower interest rates. For all we know, they've already said we have one more rate hike to implement.
Well, he wants to go against President Trump. President Trump, and one thing I'll give him a lot of credit for, he wants to be reactive, not proactive. He wants to be ahead of the game.
Did you see him at that rally? Go to clip.
the fact is, the American dream is back. It's bigger and better and stronger than ever before.
Incredible.
This guy's one of a kind, man.
Oh,
I mean, really,
sure.
right?
We knew that coming in.
So all of a sudden, Trump says, okay, Fed, you want to mess with me? How about we kick you out?
Well, he can't do it.
Oh, yeah? He
Jim,
can't send a military unit out to New York and repatriate the gold? Trump can't do that?
Oh, well, he could do that.
He could do
Sure
that.
can. Trump can't tell the Fed that you're no longer congressionally. We don't give you any approval to exist anymore. We're not going to pay your $22 trillion in debt. You can stick it up your coattails and
They're a
have a nice
private
trip
bank.
across the Atlantic.
You know, I still contend that part of the problem that we have with President Trump's support is that he's against the bankers. And the bankers are extremely powerful, and he is trying to reform the monetary system. I salute him for that.
Mm-hmm. Indeed.
But anytime you come across the bankers pull the purse strings of the globe, and they'll never take a loss.
The evil Federal Reserve Bank.
Was that Federal Express? Is that what you said?
Federal Reserve.
Oh, the other non-federal entity.
Yeah.
I got it. Okay.
Federated.
Just want a little clarification.
We've been federated. The bank
have.
got federated by.
We've been effed something, but I don't know.
All right. So okay. So now's the big question. Okay. Really, this is what really gripes my butt. Here's this whole market. You know, there's one side that thinks the Fed is going to raise rates, and the other side thinks the Fed ain't going to raise rates.
Well,
and here's my thing. I'm wondering, shouldn't the market exist where it doesn't matter what the Fed does with rates? I mean, shouldn't this be a place that is like a free market?
Well,
Absolutely.
see, that's the problem. The problem is that right now we have a corporate credit crunch, and corporate America is not borrowing money right now.
They need
to
cheap
expand.
money.
They
They
need
want
cheap
cheap
money, and that's why they want lower interest rates. The Fed failed to do that.
That's right. You know, we had a gentleman who made a lot of money on this call on gold rising the way it did, and that was Paul Tudor Jones.
Oh yeah,
Paul
we've
Tudor
got
Jones.
a cut to him, don't
Let's
we?
hear what he said. He made a lot of money on this transaction.
We're getting ready to have a rate cut. So there's rate cut 101, first cut 101 trades. They're long stocks, at least initially, long fixed income, probably short the dollar, long gold. So that's what you do into the first rate cut. The stock markets they're already trading, right? All those trades are already in process. The question is, how much further are they going to go into and past the first rate cut? I think they're
Okay, so there you go. So that the market's priced in. They know the rate cut's coming in July. They've already priced it in. The stock market went up 500. Gold priced in $50. Now he says, which one's got legs?
Well, he's long gold, isn't he?
Yes, he's long gold. He's saying everyone is shorting the dollar, which is a very dangerous statement to make. Why? Because that means that they're driving up the markets, but they're moving money into gold, and eventually they're going to dump the markets.
Well, that's why they're short the dollar. Because
Yes.
if the dollar's short, if the dollar goes down, gold has no place to go but up. We still
Exactly.
trade gold worldwide.
What
in US
scenario
dollars.
does gold go down?
Do we have
Well,
crickets?
right now, there is
Wow,
no
did I hear
scenario
crickets
for it.
there?
Do we have any crickets?
Yeah.
Good, because really, I can't
see it.
I don't either. I don't. What would make gold all of a sudden me wake up and I lost all my money in gold?
Jim, the dollar's at 97 basis points right now.
Yeah.
In order for gold to go down, the dollar would have to go to 100 basis points.
And it's
that
not
would
doing
kick
it.
everybody out of the basket of currencies.
This relationship is parallel and is unorthodox from every level. It doesn't exist. People need to realize that a strong dollar and gold going up is usually an inverted relationship. We usually see the dollar index go up and we see gold go down.
Rick, I see the stock market up. I don't even have to check the metal prices. I know they're up.
Exactly.
And that's never been the case.
Never.
Well, that's a clear indication. Wall Street's moving into gold. That's what it's telling us. We're seeing Wall Street pour tremendous dollars into gold because it's investor demand that's driving the price right now. It's not
Wall
weakening
Street
of the dollar.
is moving into gold, right? And if the banks, as we've seen, are consuming gold at a record clip, and they did this in anticipation of the gold being named Tier 1 currency by the Bank of International Settlements.
Yes.
Is it out of the realm of possibility to see the president reset the dollar on gold?
Not at all. What choice does he have?
Okay, so again, for Trump to say, I've repatriated America's gold. Well, wait a minute. Do you think that America owns any gold? The people?
Well,
you think as a people we own gold, the U.S. citizens?
No, we don't.
Okay, I don't either.
I don't think there's some gold.
There's a
is some
statistic that came out that says that German society, 70% of Germans own gold.
right, and only 2%.
And only 2% own
Yeah, I
here.
saw that.
Imagine if they repatriate.
Repatriate. Oh, yeah.
Well, this is interesting then because, hey, will it happen? Absolutely. You know why? Because obviously we're not going to benefit from it. If only 2% of Americans own gold, then why? Well, who does own it? Well, the banks, right? So why wouldn't they set on gold? Why wouldn't they say Trump? Why wouldn't Trump come on and seize that opportunity and be a man of the people? We're going to reset the gold on honest money. And then the banks got all of it.
Well,
Yeah, that's right.
see, that's the reason why Congressman Mooney from West Virginia, May 7th of this year, introduced a new bill, H.R. 2558, titled How to Define the U.S. Dollar as a Fixed Weight of Gold. Why? Number one, it was to react to the Basel III meeting. And number two, it is because the dollar has been consistently losing value for the past 40 years, and we need to put a stop to it. God bless him for following President Trump's direction.
You know, the dollar is strong in its trading currencies. So we know that. A healthy dollar that balances the global trading economy is 84 basis points. We're at 97. So in order for the dollar to become healthy, we have to see a significant trim of its value, which is what President Trump's calling for. He wants a competitive dollar.
You know, they talked about inflation. Powell said, what, 2%, you know?
Yes.
Okay, so translated, that's, hi, America, we're only taking 2% of the buying power out of your money this year.
Well, look at John Williams, Shadow Stats. He says we're truly at 10%
Well, that's
of inflation.
right. So 10%. So let's take a look at 10% inflation. If we're at 10% per annum, right?
That's right.
That's every year, right,
Yes.
Carl?
That's
Cash?
right. That's
every
exactly
year?
right.
Right?
Yep.
Okay.
Unemployment at 20%.
Okay, 20%, but wow.
20% unemployment is the official number if you use the stats that were in place right up until early 90s when Bill Clinton took office.
You hear all these politicians say we got to look out for the military. We love the military. God bless our military. And here they are getting inflation-adjusted retirement pay, and they're getting screwed worse than the enemy did to them.
2%.
That's it. They're
Cost
not
of
getting
living
any cost of
adjustments,
living.
2%.
It
No,
ain't happening.
They're not. Exactly.
No, it was a sleight of hand because it really should be 10%.
Man, what a ripoff.
Social Security?
How do we do? What do we do? Okay, ladies and gentlemen, this is why, we do this. A lot of it is, as a business, cash, Rick,
Jim.
a lot of people there are smart. There's a lot of smart people. There's a lot of passionate people. But maybe, what else? Look, gold's not going to go down from this point. I asked you, what's going to drive gold down?
Not.
I don't know. I don't know what
here's the other part. Wall Street is looking at the technicals right now. And the technicals right now demonstrate that the fact that gold broke above 1380, okay, right now it's set to go as high. The next price target is 1700 an ounce.
Yeah, that's right.
The technicals don't lie. They're going to play them and they're going to drive them. So you either take advantage now and position yourself, or you're going to miss out.
Well, we have a short time because 1,700 could be achieved in the next few months.
This is an interesting
statistic.
22%. I'm going to take a guess at the answer to this. You mentioned earlier, Rick, that 2% of the American people own gold and silver. Well, I'm going to throw this out. If all the gold and silver that's available for sale today in the United States was bought by new people, what would that number in America grow to? And what I would say it would go to, you want to hear it? 2.5%. I don't think it would move the needle much at all. You're
Why
talking
is it, Jim?
because you're not talking not a lot of gold, and you're talking 460 million American people. That's why.
In 2008, when the dollar fell to 72 basis points, and the Fed realized that the Americans were looking at an alternative currency, and they were buying up a tremendous amount of gold and silver. Silver skyrocketed 476%. Gold doubled. But what most people don't talk about, if you go back to 2002, gold was $250 an ounce.
Yep.
So we had a bull run that existed long before the recognized bull run, which is the same cycle we have in place right now.
That's what John Williams, Shadow Stats, pointed out, Carl. Yes, remember
Well,
he
it's a
said that.
fact.
Yeah, he said if you take out the inflation-adjusted S&P, right, and you put the real numbers on there, gold's outperformed the S&P since the beginning of the decade.
Well, smart money
Very true.
recognizes that gold has always kept up with inflation. If you take gold over the last 30 years, it's averaged 9% per year increase in value. Now that's over a 30-year period.
But see,
and it hasn't done it every year.
But here's another thing: Wall Street isn't reporting the news by stating that central banks have increased their gold purchases by 65% this year. That's huge, and no one is making it public.
It's 65% this year, Rick.
Mm-hmm.
It was 60% in 2017.
Mm-hmm.
So from 17 to 18,
They're even
central
increasing
bank,
it from that. Was it a 60% increase on 60% or
it was 60% increase in central bank purchasing from in the year of 2017. It was a 65% increase over 2017 in 2018.
So we're talking about a massive
125%.
acquisition of gold, right?
Oh, yeah.
Okay. All right. So that's what I'm saying. If all the gold for sale available, like, was bought, you're not talking about a lot.
No,
I mean, what is it
gold's
like?
a limited asset.
How many ounces of silver are there available for sale in the world today?
Not
I
enough.
don't have that certificate.
But I'm sure that it pales in comparison to the money in the stock market, the bond market, the cash market.
Well, gold market is the largest liquid market of all trading markets. It's the largest.
I would
worldwide.
imagine that there's less gold for sale than we have credit card debt in this country.
Less physical
Less
gold.
physical
That is
gold.
correct.
Absolutely.
I would imagine there's less physical gold for sale available in the world today than is our student loan debt.
So here's the point, Jim. Here's the point. If you've got consumer demand on a limited asset, what's it going to do to the price?
Going to go up.
Skyrocket, right? This is the time to get in. This is the time to buy right now, Jim. As I said, we had a bull run long before 2008.
If the American people don't wake up and realize that it's time to protect their wealth, it's time to reposition and go with what the banks are moving into, they are going to be left holding the biggest bag of toxic paper on the planet again.
I remember Mom German saying they used to bring the wheelbarrow around in Deutschmarks, and the wheelbarrow was worth more than the currency.
Isn't that a shame? I have one of those, by the way.
They were in such a, and this is the Germans, practical people, they were in such a rush to print their money that they printed the new notes over the old notes. They didn't even use new paper.
Well, now we understand why 70% of the German population owns gold.
Well, inflation, real numbers, we covered a lot of areas today. Any of course, anything further that any of you guys want to say to the people about what we got from today from today's
news? There was
news?
one more thing that occurred that we didn't cover, which was bonds. Bonds came down 2% because the bond yield curve is inverted right now.
So who wants to buy a bond? You want to buy a dollar bill?
Well, if we cut interest rates, what will happen to the bond yields? It could go negative, couldn't they?
You know, the whole thing's not going to last. It's going to be stretched out sideways until it breaks.
We're at that moment.
Yep.
This is the chance. Get on board.
Critical
while you got a
point.
chance. If gold hits
Moment of truth.
$1,700, that's another 22% increase from where we are today.
Well, that's where we are today, and we'll look forward to tomorrow. Ladies and gentlemen, on behalf of Carl and Rick and Anthony on the board, have a great night.
Well, she's passionately lean, and your IRA is gone. Well, you got government